and good evening. This is the Elliott wave update for the S&P 500 for Thursday, October 14th, 2021. I've got to be honest with you, I've never had an order filled so quickly as we did in the markets after last night's update. Both the S&P and the NASDAQ and the Dow and the Russell all let know their intent. And we broke above several resistance points. And as I said, if the intent was try to get this market in the S&P back above 4,400, it needed to do it, and it needed to just start breaking resistance. And the buyers came in, they took control, and they broke the resistance. So first thing you're going to notice, I've changed the labeling. Not necessarily the little bit larger count. I'm leaving that as is right now. So we're still intermediate 1, intermediate 2. I'm looking for this as being minor wave 1, a minor wave 2. I do not, or it cannot break 44.72. And we're within 40 points. So if tomorrow gets it, breaks that, then it just shifts things to this becomes an A wave, this becomes a B wave, and this becomes a C wave. And I have not decided as to what degree. I'm afraid it's likely going to have to be on a minor degree. So I'm going to have to back all of this out. And this would be minor wave A, minor wave B, and minor wave C to finish intermediate wave A. If indeed this breaks this level and keeps on chugging, because that then suggests that we're in a B wave, and that B wave would then have potential of getting up here in 40, 4580, 4600. So we're back to those levels that were in play when we were making this high. And at that time, 4600 was the apparent victor, or looked like it was going to, but we stopped midway at 4550 basically, and then dropped. So a B wave could take us to new all-time highs and still be considered corrective. It was a long count to get up to this point. So I've added all the levels as well. And this supercycle level on the ES, because it's a future on the S&P, we can get trading data on the SPX back to the 20s, the 1920s. So it's quite a long-term bull market in the long term that's been going on. And it's not that on that size of a scale, it's not over yet, but we've reached a major high. And in terms of the size of the correction that's coming, it's going to feel pretty painful. And so we're just in the infancy, we're just in the very beginning. And so with that in mind, I may have jumped considering this to be intermediate degree when actually it's minor degree. So you can see minor degree, you can see how many levels we're correcting. That's where it all comes from. So if we're here, then the next level up is there, and that would be put here. If the market breaks 44.72, that's going to shift the balance back to the buy side, and for whatever reason they're going to be buying. To me, it's like, who cares? The fact is, that's what the market is doing. And so it likely would have no relationship to reality. And that'll be a major thing, because assets get shifted around in all kinds of various forms right now. And so a lot of that, I think that's what would be happening. We'd be seeing assets being shifted, and in what form, et cetera, et cetera. In any case, the 4-hour chart does continue to now show, here we have, this is minute wave A, minute wave B. We're in a minor wave 2. And if I had to count this out as an intermediate degree B wave, well, then these would be minor. minor A, minor B, because the structure itself stays the same. If someone were to count this as a complete five-way structure, I would disagree 100%. This was 5, that was 5, this was 3. And so this is corrective. That's why it's labeled A. And the whole form should be A, B, and a C. The C wave can be quite characteristic, and that I'm feeling right now, again, basis the 4-hour chart. 1, 2. So 1 of C, 2 of C. All C waves are 5-wave structures. 1 of C, 2 of C, 3 of C. Beautiful, 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 beautiful C wave. As I continue to say, C waves, whether they're third waves, whether they're in a part of a C wave or just a part of a 5-wave structure, will always, most of the time, be the longest and the strongest wave. This was very powerful. This S&P went up for 32 hours straight, 32 hours straight, buying. Yes, if we go in between, there were declines and they were very tradable. But as a market, it went up for 32 hours. And it's now time. So beautiful third wave. It's now time to correct in a 4. We would run retracements and tell you what, not that I like doing it because it takes so long to, I am going to remove that drawing. I am going to put up retracements. Because now if we're seriously looking at a little bit of a fourth wave correction, this is the 4-hour chart, and this is saying that the market still would have a 5th wave up to do. So first things first, 3A2, that's the most common retracement, 43.92. Now let's go down to the hourly chart, take a look at it. Our fibs are already in line, and we have corrections a little bit higher. So maybe the market, and this would be basis the hourly chart. I'm going to take it down to the 15, see if we can narrow in on this. Yeah, right there, as I thought. Beautiful trading day. Just got to tell you, it was actually, yesterday I was talking about that it was 2 days of really great trading. We can now add another. Today was very, very profitable. If you could just wrap yourself around, we're going up and we're not going to stop. And then but we did, and there were periods of very tradable retracements. So in any case, this could be the end of 3. We're looking for it. This would be first support, like it was shown before, 44.20, and the 20 moving average on the 15-minute chart. So it's already come down once, guided it back up, has now been just kind of broken here in blowbacks, but they're very uncomfortable staying below it if there indeed is additional upside. So they're going to sit right by it. But I would think that this is really fun. And then also just in about that same area is the 50 big moving average on the 15-minute chart. So also a logical place for any correction to kind of come down. But that, because the pressure is still to the upside right now. So that's why I would look for here. But if I'm going to measure Fibonacci-wise, we got 44.10 to 43.93. Well, that's not that bad considering the rally. So, and I think, you know, sellers, it's a 4th wave, so often it can. You know, everybody's going to invert, and that's like, okay, I'm selling now. So it can happen, and then we go one more time. Now, back out to the hourly chart. And let's see, I'll just open it up this way. We have 44.39. We have cleared that high at 44.21, 44.22. And so this is just all gravy. This is bonus gains, because on an Elliott basis, the market just needed to surpass the top of wave A, and it did. So we're into resistance all the way up. And let me see, I've got would set it up going to the downside instead of the upside. Because these are for fourth wave. If I go back out now, I'm going to remove those. So remember, 44.10 to 43.93. Now I'm going to get rid of those and put back on undo Fibonacci traceroutes. No, I'll put back. Okay, I'm going to put back the others, and so I'm going to put back up to that 4-hour chart, and that's going to be for the C rate. So right now I want to connect to the top of the A wave, to the bottom of the. Okay, so we're just now getting ready to cruise up against, and we're actually not too far off, within $5. We got as high as 44.38.25. Next resistance is 44.43. I don't want to see it come up to 44.72. So between there and there, there's really nothing that can stop it other than just its own weight, and then it starts to come down. Again, I've gone over to, if it breaks this level, if it does it tomorrow, at least it'll be a Friday, I will rework everything. And on Sunday's update, it would include an update on that larger count and what's behind it, and et cetera, so that we are moving forward on the same page. I still, no matter where this completes, whether it completes up in this area or whether it jumps and goes to all-time new highs, I continue to say that what comes next is a pretty strong downside move. It doesn't make any difference where it ends up. How it's going to come down, it's not going to be, I don't think it'll be great to trade, but this, as surprising as these upside moves can be, like with the strength that they're just coming in and buying it against the reasons that we were going down. All right, the selling, I think there was better reason, but this is all at a hope and win and the prayer that all of the earnings reports are going to come out and they're going to be wonderful and great. Alcoa, they liked. So more than likely, they're going to continue to buy this based on Alcoa putting out good earnings. So that must mean we're going to have a positive earnings season. You know what they say. But, you know, as a day trader, it really just puts a little bit more gravy on those mashed potatoes. It just makes it a little bit more tasty. And I'll tell you why. Because we'll get those wonderful moves and we'll continue to be able to trade them. And now, because we have so much volatility going to the upside, that when the downside kicks in, it'll be a mad dash for the door. Now, at the exit sides. And it's like, unfortunately, there likely will be a lot of bodies will be piling up there because there will be damage done. It's going to, I think when it reverses, it will do just that. It'll reverse, and somebody's putting in reverse and hitting that gas pedal so hard. That's how I think it could drop. Because for whatever reason, they're pumping it up. I think it might come to its conclusion tomorrow. Tomorrow's October expiration. And so we've seen, you know, you can go back Fridays and look to see how things act on this was a Friday. You know, this was a Friday. So you can kind of see what happens on certain expirations. If this dies now and something comes out and they start hammering this market, oh God, I would really expect it to start to really blast through, because they're going to blow through strike prices, not only in the indexes, but in the spiders, in the Qs, and then the individual stocks. They will start blowing through strikes. And to do that on an expiration, you're swinging a lot of money in a lot of positions. They have to adjust and cover and do all sorts of things. We could be in store for a very wild ride. So I think we need to be prepared for that as well. So tomorrow, I think that this is a fourth wave. We have the limitations, 44.20 down, actually just below 4,400. And that then on a 4-hour chart just brings us down to the 4-hour 8 and the 200, which we broke during today's session. And that added a lot of oomph. Look at that bar. Boom. Broke that and just kept on going. 4-hour bar, but man, powerful. And looking for a little fourth wave. Already coming into the 8, pretty high, but still. We have that support, starts at 20. Then we have support that comes down to 17, and it comes down to 92, I believe it was. So 43.92, that would be. So down in here. And that's still above the hourly 50, which is great, but we may come down and test the hourly 20, and that's at 44.08. We could do a little bit of a dip, but I would expect we're going to get an additional rise, a new high. Hopefully it's going to hold around 44.45 to 44.50, even 60. I really just don't want to see it above 44.72. It just delays that inevitable even longer. Now we got to wait for it to get up above 45.49. And then it's like, okay, as long as it's tradable, they can do whatever they want. But it gets to a point where you have to be so cautious because we're up so high, and somebody's going to walk in and boom. The good thing is a day trader, we have sell at the market, buy at the market. And no matter, you may not like your price, but we can get in and out of the market. So again, today was the type of a day that the trades were good, but if you got stuck in the trade and you had to take a hit, you could make it back pretty quickly. I feel very strongly that that will continue. We may go through intense periods of like being in a box, same highs, same lows, and you got to break out of the box one way or the other. But while we're in there, they can be very vicious up and down moves. And depending on the size of the box, I've seen them with the like $30, $40, $50 boxes, and you're just trading in between, and it's chop basically. But many times extremely tradable. But you have to recognize, put the limitations around it, and then make it tradable. In any case, I think we go down a little bit. Corrective fourth wave. We saw the fifth wave up to do. My first look is that it really holds to resistance at about 44, 45 to 50. Let it go up to 55. I do not want it to go above 44.72. Doesn't mean it can't, but that rearranges the whole picture. Still a B wave, but rearranges the whole picture. That's it for today. And trade smart, trade using your moving averages, particularly on the near term, or not the small time frame charts. Use your moving averages. They help guide. They help make entries and exits. And have a good trading day tomorrow. And the next update will be on Sunday, the 17th.